Thank you so much, Radhika. Thank you so much, everyone, for being with us here this afternoon. We've already had a kickstart on a bright and positive note. Let's hope to take this forward. Thank you so much, Mr. Khara, for sharing all those wonderful insights on the banking system. And we're going to be talking about the new age banking, the fintech space now with brilliant speakers. Now, as all of you know, that India is hailed as the third largest fintech startup ecosystem in the world, which makes it the fastest growing sector also in India. We are growing at a rate of 30% plus CAGR, and we are home to over 7,000 fintech firms across various industries as well. And most of them have actually come in over the last few years, last 5 to 6 years odd. So that's the kind of pace that we've seen. It's everywhere around us in every form that we can actually think of. Now, what we want to, of course, understand from our brilliant set of panelists today, who've actually seen this journey through of how the fintech world has evolved from traditional banking to into this new avatar. And we want to know what's next. What will fintech 2.0 really look like? What is the shape and form that it is going to take? And how is it really going to change and impact our lives? We've seen it with UPI, but let's see how many more things are going to be as revolutionary as the UPI. Thank you so much, dear panelists, for being with us. I'll start off with Upasna, you, and I want to understand from you. You've actually been a critical part of the first 10 years of the fintech industry. You've seen it grow from absolutely a nascent stage. You've been a part of it. You've learned from mistakes. You've actually improvised on a day-to-day basis as you've seen things. Tell us, what are the possibilities that we can imagine Fintech 2.0 driving in over the next 10 years from here on?
So firstly, it's wonderful to be here in such august company. So thank you so much for having me. I think you're right when you say that, fintech in India is, it was not even a keyword when I started. In 2009, fintech as a keyword did not exist. At that time when we were getting started, people used to say, "Acha, digital payments kuch kar rahe ho," like that. So I think it's an amazing thing that today, at least 400 million Indians are actively using payments digitally and across all kinds of, apps and form factors. So I think payments is sort of the least common denominator in terms of fintech disruption that this country has seen. But if you think about it, after that, whether it is credit, whether it is access to insurance, access to savings and investment products, less than 10% of India is actively able to use these products. So there is a long way to go. And I know what I'm saying is very basic. What I was trying to then say that while we have seen some successes in the form of, let's say, a Grow or a Zerodha, from a broking perspective, or we have seen Policy Bazaar and others from an insurance perspective. But all of these platforms are not serving 400 million Indians yet. So far, they're only serving the top 100 million Indians. And when I think about India, India is like, there's India 1, India 2, India 3, India 4. I think now that we are here, going forward, I think fintech companies in India are going to go after, let's say some companies will only go after India 2 in a category. Some companies may only go after India 3. So I think we will see more specific and niche plays rather than just a very large universal play, because I don't think one size fits all. And of course, with AI and, data becoming so powerful, I do believe that there's going to be far more innovative disruption rather than just providing a very basic and fundamental service like a payment service or a QR code, etc. in the market. So that's sort of how I think that it's going to be a very exciting time. You're talking about 7,000 startups. I think that if India can have 100 plus banks, then India must have 100 plus large scale fintechs also in the next 10 years.
Okay, 100 plus large-scale fintech companies. Let's hope that we see that. We'll come to that as well. But I want to understand from you, Prashant, and something that even Upasna mentioned, that, AI and the new technologies that are surrounding us in every space. Do you think Fintech 2.0 will be ruled by how these technologies are able to evolve, make it more easier for people to access fintech, right now, which Upasna also said, that only the first surface has been reached through beyond the banking space. Do you think this AI, machine learning, new technologies will be able to, help or assist fintech companies in the present avatar to really reach that last mile?
Hi. Yeah, thanks. Thanks for having me. No, I definitely think, if you were to describe FinTech 1.0, it's largely, what Upasana talked about, Mr. Khara talked about, where the rails have been laid, right? We have UPI, we have the account aggregator framework, we have the digital public goods on which the country is building on, which means that all of these platforms are getting a lot of data. And I think, you mentioned artificial intelligence. We're just starting out there because now that the data is becoming available, a lot of people are looking at how do you make sense of such a large amount of data and drive innovation towards that, right? For example, a simple thing is a bank statement today through the account aggregator framework. We get the raw information. I think the real challenge is going to be in how much we can squeeze out of that raw information. It's just not a question of, maybe credit and debit and some analysis, so to speak, but can I go deeper? Can I create a behavioral score? Can I look at clusters of what you are saying, whether it's 1, 2, 3 segment population, and can I get some intelligence and insight out of that on which I can offer a financial product? And I think it's going to get to that level, and I think machine learning and AI will significantly power some of that. And we've seen all the large financial institutions and the fintechs invest heavily in this space. We know we are investing heavily in this space. Our behavioral scores are used by several financial institutions to be able to make a decision in terms of a profile of business behavior or a, yeah. So I think FinTech 2.0 is really going to push down that way, is to make more sense of that data using some of this newer technology. It's just that I think right now the technology is really new. A lot of people, we don't necessarily have the skill set even at a large scale to be able to employ that. As in India, previously we had a lot of people used to do, it didn't matter what degree you did a 1-year course and you came and then you became a computer engineer. I think we're going to get a lot of AI engineers like that, which, and so it's really going to take some amount of work before we come up with these really solid, robust solutions, which is where I think fintechs can play a role in that
Okay,
space.
interesting. I'm going to come to you, Mr. Chadha. You have the most, experience on the panel here with the way you've seen the banking industry very, very closely, and now you're building NBFC. And something that Mr. Khar also mentioned, that phygital is the new word, and you are both in the physical as well as the digital realm as well. I want to understand from you, how do you really see the next 5 to 10 years shaping up for FinTech 2.0? There was this initial fear that will fintechs become so powerful as to replace banks? I know Mr. Khara is right here, but do you think this space has that power to replace traditional banking completely with the advent of technology and the way it's going to be shaping up?
Yeah, yeah, thanks. I fully agree with Mr. Khara when he said that phygital is the new forward here. I think India has a unbelievable opportunity in leveraging the physical infrastructure which has been created over multi-decades, and now what's happened in the digital infrastructure which has got created in the last 5 years, right? And I fully agree with the two of my co-panelists as well, that the world is going to be extremely different over the next decade as far as digitization is concerned, as far as fintechs are concerned. But let's understand that today when we see at least the lending fintechs, because as a previous banker and now founder of an NBFC, in the lending space we've seen fintechs operating much more in the urban spaces, much more with prime customers, much more with small ticket loans. But when it comes to the more difficult to do business, which is where at least APAC Financial is focused on, which is in the MSME space, in the semi-rural areas, in the larger ticket sizes, I just find that an omni-channel presence is, it's quintessential actually, right? And I was speaking with one of my friends, Falguni, who runs Nika, and we were just chatting a couple of evenings ago. And if you see, whether it's Lenskart, whether it's Nika, You can think of them as being operating in the non-physical infrastructure, but they are building stores as much as we are building our digital platforms here. So I think there is convergence. There was a mention previously also by Siddharth, I think, about whether it's the death of the physical providers. I don't think so. At least we believe that if you want to operate in the more difficult to do business, in semi-rural, in new to credit, that customer needs to be educated. And I think being in the physical space allows you to provide better fair practices and education to the customer. And as the customer gets into the digital space, of course, then it becomes even better with the fintech tools and everything else. I also think that, you know, of late there has been comments around fintechs having run out of the cash, you know. I think if you have to really think about it, it's not because of the technology platforms, it's because some of them had poor business models, as simple as that, right? Some of them just had poor business models and were never going to accrete their profitability in spite of how much customer acquisition they have. But there'll be more successful fintechs, right, out there. But equally, there'll be more successful phygital providers of credit as well. And I think the two go hand in hand.
I also want to take that point forward with Upasana. And I wanted to ask her, as far as the fintech players are concerned, you did mention that we should be seeing 100 plus large-scale fintech players. But so far, you know, we were hoping that fintechs will be the key disruptors. So far, they have only emerged as ancillary players. Will they continue to be ancillary players? Will they be the disruptors that we initially thought them to be? You know, Mr. Chadha highlighted funding issues. The challenges still persist. There are regulatory concerns as well. How do you think you will be able to reach that last mile, which still hasn't been able to be done, despite all this advancement over the last few years?
So, I think actually there are a couple of questions, you know, packed in there. Firstly, as to your question about, you know, being ancillary versus OEMs. So I don't think that, you know, fintechs can really be OEMs, because frankly speaking, India is a very heavily regulated fintech market. And I don't think any fintech is getting a, you know, OEM licenses anytime soon, especially in banking. But even outside of banking, whether it is, you know, insurance, whether it is on the, you know, investing side, very few fintechs have actually received OEM licenses. So therefore, distribution has been the model that most fintechs have gone after. And I don't see that as ancillary, because just producing a product is not important, right? Like making it reach is also equally important. So I think that there is a lot of meat just on the distribution side, given that 90% of India still does not have ease of access to financial services. And that is despite the fact that we have thousands of NBFCs and we have, you know, 100 banks in the country. So I think everybody has a role to play with regard to, you know, my claim of 100 fintechs and how they will scale. So I think this is the first decade, I would say, where you are seeing fintech companies. There are quite a few companies at scale. And it is extremely hard to make money in India. I mean, I would argue that founders who are trying to build sustainable business models in fintech in India should be applauded just for the heck of it, because many of them, you know, could be building those businesses in other countries and they would reach $100, $200 million revenues and profitability much faster, because the ticket sizes in those markets would be, you know, such. But we are trying to do it in India. It is a harder market because there is a lot of regulatory pressure. There are a lot of changes happening all the time. And it is not easy to explain to investors. Now, of course, funding markets have not been good, but not just for fintechs in India. Funding market has not been good for fintechs globally also. But despite that, you know, if you are seeing 1, 2, 3, or whatever number of companies you are tracking, if you are seeing them growing, and if you are seeing them either achieving profitability or inching towards profitability or showing some profitable growth patterns, I think that should give you a path of where ultimately these companies will grow. I think the years of raising money and whiling away money and wasting it, I think that is gone. I think COVID and the sort of slow years of the funding crunch have made all the fintech founders very smart. Most of them have significantly brought down costs and are moving very rapidly towards growth with profitability. I can say for our own account, since our data is publicly available, financial year 24, we were able to grow more than 50% over financial year 23, and we were able to go from negative 55 crores in FY23 to positive 37 crores of EBITDA in FY24. Now, if I look at my current year, first 2 quarters we were profitable, third quarter we are not profitable. So, yeah, short-term basis somebody might say, but why is the company not profitable? But hey, look at all the macros. Look at the results of all the banks and NBFCs, right? So if a good chunk of, I'm just using my company as an example, not for anything else. If a good chunk of my revenue is coming from payments and that's growing healthily, profitably, that's good. But if the macro of, let's say, credit distribution is slow in India, then of course it's going to impact every fintech that is doing credit distribution for the bank or NBFC, who is the OEM and calls the shots in this case. So I think a little bit of pragmatism, a little bit of long-term view from the ecosystem players and especially the domestic investors will go a long way in building out that run-up of 5, 10, and then eventually 100 scaled fintechs.
And do you actually see, companies like yours probably also looking to become super apps offering all, things in under one roof, BFSI all together to actually look at profitability also growing, since payments is the only thing which has been primarily being seen as whether it will be able to make money for you or not. So do you think that's something that will help you scale?
So I think that is but obvious. I mean, what I can say is that we have been making, money in payments, quarter after quarter and every year, including in the latest quarters also. So we do payments profitably. But to your question, every business that is in the model of having multiple products would want to sell multiple products to that customer, because that will mean higher lifetime value of that customer, higher engagement and higher repeat rate. So it is but obvious that after payments, if the user is sticky to that app, then the app will try to bring products from different partners. For example, it is not just fintechs are not just trying to do credit distribution. We ourselves launched in partnership with various banks and deposit taking NBFCs, we brought fixed deposit on our app. And today, a user can compare the FD rates for 3 months, 6 months, 12 months, whatever, and book an FD for any of our bank partners or deposit taking NBFC partners right there from our app. Now, this is not something somebody sitting in a tier 3 town has ease of access to.
Correct.
That where can I get the highest yield? And I think that is what I mean by trying to bring multiple products to a user, trying to also serve the user, because those people in those tier 2, tier 3 cities, they are not seeing every bank right there in their vicinity, in their town. So they don't have an ease of use. Internet is the way by which they can understand where I can save the most, where I can get the loan for the cheapest, etc. Sorry, I went a little over.
It's okay. Mr. Chadha, I'll come to you. I want to understand, right now the biggest concern that's being seen in the fintech space is the regulatory hurdles at this point in time. To help us understand, how do you think regulatory frameworks can in fact assist in greater penetration of the fintech space in the spaces that you're also catering to, the MSME space, to the rural space, and even the semi-rural space where, like Upasana also mentioned, the access is still very difficult?
I'll answer that question before, if I could just make a comment at the previous
Sure.
point. See, I believe that if your core business is not going to make money, then putting more products around that core is not going to solve the problem.
Okay.
Right? The core has to make money. And I also believe that it's the same philosophy. Federer plays one sport. The rest are just hobbies here. Okay? So whether it's fintechs or whether it's NBFCs or banks, figure out what is the sweet spot or what is the more difficult to do business which you think you can do, but that has to be the core. The core has to make money. Okay? And when I think about core making money, it's not about EBITDAs and it's not about GMVs and footfalls. Ultimately, come down to the bottom line. Is the bottom line making money or not making money? And if it's making money, will it make money consistently? Right? Otherwise, you will keep suffering from the cash burns and suddenly funding winters, and then suddenly capital will re-emerge and the same. Right? So, big believer in the power of fintechs going forward, but all fintech founders better ask themselves the question, is my core making money or it's not making money? As far as regulation is concerned, I think in many ways it's a carrot and a stick approach here, right? As a new industry, just a decade old, it is perfectly logical that the regulators need to understand the practices in the industry as also the benefits of the industry, right? At the same point of time, any new emerging sort of industry, and let's call fintech that industry, does need support, right? Whether it's liquidity support, banks have it coming from their public deposits, housing finance companies have it coming from NHB. What about NBFCs, whether they're fintech or non-fintech, coming from whether it's NABARD or whether it's SIDBI or whether it's RBI? I think some liquidity support would be a good thing coming for the industry overall. I also think that the tools available should be on a level playing field in some ways. Why is SurfaceE not available to NBFCs below 20 lakhs when it's available to HFCs and it's available to banks? So the same credit product, the same lending, there is a significant disadvantage to NBFCs and fintechs in that space. The last point I just want to make on this is, sometimes I even ask myself the question, what is a fintech? Now, you walk into many banks, and I'm sure State Bank is a good example, or you walk into an NBFC like APAC Financial. I can tell you, we are totally paperless. But yet, I don't call ourselves a fintech because across our 200 branches, we have 2,500 people. But we actually benefit from our people educating the customers, explaining to the customers, helping them digitize, helping collect, and putting them into a habit of our collections becoming digital. But we see the value of this 2,500 people. Are we a fintech? No. But are we digitized with virtually paperless? Yes. Right? So ultimately, I think it's extremely important for fintechs, for NBFCs and banks to be clear, what is the core, what's your business model, and if it's not making money, the chances that's not going to make money tomorrow also, yeah. So fix the core then.
Fix the core. Okay. Prashant, I'm going to come to you. The government has laid enough and more importance on creating of the digital public goods. I want to know about scaling of the digital public infrastructure from here on. We've seen UPI, there is a lot of talk on ULI as well. What do you think we can now do to further this entire space over the next 5-10 years? What is it that we are looking at going forward as users?
So I think we are early adopters. We've integrated into ULI. We're seeing some of the data sets that are coming out of that, the land records. And so I think it's digitizing several products that largely had, middle office and back office intervention in that sense, or, third party, providers to help with that. And then, like I was saying, the more the data starts flowing in, the ease of distribution, of getting to the customer, of bringing all of that is going to come forward, the analytics and all of that on that. And so as all of these initiatives come under digital public good, you are going to see, I think it is going to get trickier also for fintechs, because if there are no solid revenue models around this, it is going to be extremely competitive and challenging to operate. As Upasana was saying, in India to operate these businesses could get tricky in that sense. But on the larger story of digital public good, I think, and this is where I think fintechs also play a role. For example, we partnered with SIDBI and we created, I think, India's first privately provisioned public good, which we now give back, which is a high frequency MSME economic activity indicator, basis GST data. And on the 5th of every month, we are able to release an index, which is like any of your other indices, your stock market index, but which tells you what is the level of macroeconomic activity of MSMEs in the country. And these are obviously credit-seeking MSMEs that are coming to financial institutions, but they're a very good proxy for the MSME sector as such. And so now we're giving back to the ecosystem. How are financial institutions using this? So they're plotting the index, comparing their portfolio, and then looking at whether their selection of MSMEs is actually correct. Or they're looking at and saying, how is gems and jewelry doing compared to plastics, compared to textiles, compared to auto? Where are they seeing, some of the defaults rise, or which green shoot areas could they focus on? So I think by partnering with some of these large institutions, building on top of this public layer, we launched the indexes called Sampoorn. We give this data away for free. You just go to sampoorn.in and you can get all of that information. So I think this is really evolving. There is no revenue model there, but it's, I think, the ability to make decisions basis data, and data all the way at a macroeconomic level, all the way down to the granular MSME and the behavior of the MSME is where I think the transformation is taking place. And we're really building on top of this public good that the government is putting out, whether that's UPI, GST, account aggregator, ULI now. So I think it's going to get extremely interesting, extremely competitive, and I think we have to work together, as I think various folks have said, in a collaborative way, in a constructive way, whether we want to call that for the public good or, in this environment. I think that's where we're heading. So.
Okay, I'll come to Mr. Shadda, and I want to ask you, sir, what is going to be the next UPI moment for India over the next 5 years, 10 years that you see?
I think when the rural and semi-rural India actually become as digital literate and are included in the financial architecture, I think that's when we will say, whether it's fintechs or whether it's digitization has truly arrived. And by the way, that's not very far away. That digital footprint is getting created every single day. So that next UPI moment could very well be not more than 5 years from now. And I think we're headed in the right direction. I have to say, whether it's the government or whether it's the regulators, I can't think of any other country which has done better than what India has done in terms of that UPI moment, and probably the next one as well. I am very confident that that is going to happen.
Okay. Upasa, I'll come to you for the last word. We just 2 minutes to go. What are the clear milestones that you believe will help us understand that the fintech industry and the sector has fully realized its potential?
Well, I'll keep it very simple. I think that I said before, I believe there are about 400 million active users digitally. In terms of merchants, I believe about roughly 50 million merchants are accepting payments digitally today. And I started MobiKwik when I remember there were like 1 million or less than 1 million POS machines in India. And that was just 15 years ago. So I think we have come a long way. But I think this number of users and number of merchants, and by merchants I mean like really small kirana shops, MSME, I think this number is going to double from 50 to 100, and 400 million Indian consumers will become 800 million. And I think that is really going to be the big testament, because like I said, payments continues to be the LCM or the least common denominator, and once payment reaches, then you have transaction data, and then only other financial products can reach these people. I think that is one way to look at it. Another tidbit I'll tell you, very recently I was talking to some banker and a private bank, and he said SME loan for us starts from I think 4 lakh or 5 lakh. And I was like, sir, kya bol rahe ho aap? It has to start from 1 lakh or less than 1 lakh, because the real Indian MSME is actually not an SME, it's an MSME, and 1 lakh is... So when all the banks start offering 1 lakh rupee loans to the small merchants, I think that can be another milestone.
But how can fintechs like yours help banks or assist banks in doing that due diligence when it comes to giving out such small ticket loans?
But isn't exactly that what we are doing, because once we have these merchants accepting payments via us, we have some data, we have their KYC, and the opportunity to do a fully digital loan, where again the bank is only underwriting them. We are just distributors or aggregators or digital DSA, as I would like to call it, where we are bringing the cost of processing down for both the bank partner as well as for the MSME or the merchant in this question. That's exactly the role of fintech. Bring the cost of every loan processed, insurance processed, or investment product processed down from what it currently is.
So, Mr. Chadha, a more collaborative approach rather than one replacing the other. Is that what the last word should be?
Listen, I think sitting in the digital space where we are sitting, we learn a lot from the fintechs. We learn a lot from the fintechs, and if we can achieve the turnaround times which fintech offer to the customers with the credit discipline which the more digital channels have been offering for decades, I think it would be a win-win moment as far as the credit and lending industry is concerned. Will at some point data take over the credit assessment of cash flow lending which is happening? Possibly. But I still believe that at least for the next 5 years to 10 years, there is probably the phygital is a better place than pure digital or pure physical. And I really think the fintech companies collaborating with the rest of the ecosystem and making the rest of the ecosystem becoming better than what they are currently will make a big, big difference to getting into the inclusive rural micro SME, the more difficult to do business, the new to credit India. And it's happening here. It's happening every single day here. So I'm very optimistic about the forward for this industry here.
All right, Mr. Chadha, Upasana and Prashant, thank you so much for being with us, and thank you so much audiences for being wonderful. Huge round of applause for our panelists for sharing with us such wonderful insights, hoping for a more collaborative approach. Thank you so much for being with us.